GameStop quietly builds a 5% stake in eBay. Then, out of nowhere, they make a bid to buy the entire company. eBay rejects it instantly, but why? What's happening behind the scenes? And is this the beginning of a hostile takeover attempt? Companies reject hostile takeover bids for three main reasons. They think the offer undervalues them, they don't want to lose control, or they fear the acquirer's intentions. eBay's board would almost certainly claim all three, but the real reason is simpler. A takeover by GameStop would fundamentally change eBay's business model and threaten existing leadership, and boards protect themselves first. So, is a hostile takeover in the works? Hostile takeovers happen when a target rejects a bid, or when the bidder goes directly to the shareholders, or they try to replace the board. GameStop could theoretically pursue a tender offer or a proxy fight, vote out the board, and install directors who will approve the deal. Both are expensive, messy, and time-consuming, but they are possible. The big question recently has been, can GameStop afford to buy eBay outright? Let's break this down. eBay's market cap fluctuates around $40 to $50 billion. At $125 a share, that would value it higher than $56 billion. To be blunt, GameStop doesn't have that type of cash or borrowing capacity. So no, GameStop cannot buy eBay outright at $125 a share. But that's not the end of the story. Could GameStop try to control 51% of the company? This is where things get interesting. To control 51% of eBay, GameStop would need to acquire tens of billions worth of shares, on top of avoiding triggering regulatory issues. So it is theoretically possible, but practically it's unlikely. However, GameStop doesn't need 51% to influence eBay. They only need enough shares to pressure the board, enough shareholder support to win a proxy fight, and enough leverage to force negotiations. This is where their 5% stake matters. It also means eBay can't simply ignore GameStop and pretend this isn't happening. And if GameStop were to team up with activist investors, then you have a coalition. So can eBay resist or use a poison pill without violating their fiduciary duty to their shareholders? The truth is, yes, they can if they justify it as protecting shareholder value, but they can't if it's used to reject a fair offer that would benefit shareholders. If GameStop's offer is strong enough, poison pill becomes legally risky. But whether they pull it off or not, this situation reminds investors that you have to be calculated and focused if you're going to properly navigate complex situations like managing your own portfolio. Just like a company trying to buy out a giant, your financial journey will involve setbacks, surprises, and opportunities. So stay focused, stay adaptable, and always expect the unexpected. Like and subscribe for more interesting financial stories that you might not hear anywhere else.